Well, so good morning, Karen. Just to be clear, our underlying growth on the top line was actually 3%, and we took significant market share again this quarter. We're 935 basis points ahead of the competition, ahead of our peer group. That's the fifth consecutive quarter that we've taken share. And to the point in your introduction, as we work down the P&L, we're ahead of expectations at every step. So our gross margin was healthy at 20.8%. We had strong productivity gains of 6%. Our SG&A, which is part of our G&A savings program, has come down from 17.5 to 17. And as a result, our margin has gone up by 40 basis points to 4%. So we're actually very happy with what we're doing in a fairly challenging macroeconomic environment.
Certainly some positives in the numbers, Coram, and I thought the market share gains were certainly a standout here as you reported the effective relative revenue growth of 930 basis points. The market share gains, how difficult is that going to be achieved at this point, as we know that the labour market isn't as strong as it was? It's still strong, but not quite to the same point. Will those market share gains be more difficult to achieve from here?
Well, I think there are a couple of points here. In terms of the labour markets, the wider macroeconomic environment is challenging, but labour markets still have talent scarcity, have very low unemployment rates. You're seeing wage inflation as a result of that, which is continuing right now. So despite the wider economic environment, actually the markets for what we provide as services continue to remain reasonably strong. I think the other point is that we are a big player. We have 5-6% market share of the total market. There's a fragmentation which allows us to continue to take share even in difficult markets. And the reason we're doing it is because we've invested in the business over the last 18 months to really make sure we are positioned to identify the talent that our clients need and to meet those needs. So we think we can continue to take share. That is absolutely our objective.
Coram, good morning to you then. Have your rigorous cost discipline measures begun to perhaps bear fruit? And I mean, what's the target still for the remainder of the year, for the whole year then? Is it still sitting at 135 million euros?
So, I mean, we're really driving two things in terms of costs. So where we've invested on selling expenses, we're driving productivity. And that's part of where we're getting the share gains. And actually, year on year in the quarter, our productivity is up 6%, and every part of the business has contributed to that. So we're very pleased about the productivity on the sales resources. On the G&A, on the general and administrative expenses, we announced a program earlier in the year where we would deliver 150 million of savings by the middle of 2024 versus the 2022 base. And you see the benefits of that really flowing through in the P&L this quarter, because we've got 24 million of savings, and our percentage of costs as a percentage of sales has come down from 17.5 to 17. So we're absolutely confident we can deliver that 150 by the middle of next year. And as a result, we're upgrading our expectations for the end of this year. So previously we said we'd have a run rate of about 60 million. We're now saying we'll be at 90 million. So I think to your point, the cost savings program is very much on track.